Welcome, my people. Today I'll be doing a trade recap on EURUSD. My analysis started from the 1 hour time frame, but before we get into the charts, I would like to show you a diagrammatic representation of my setup. So basically, the trade I took was a sell trade, and this is my sell setup. And in taking my trades, in general, I focus on three concepts: market structure, liquidity, and supply zones. Basically, I'm expecting price to move up to a certain point where I'm able to identify a supply zone. And once price is able to move into a supply zone, I'm expecting a reaction of this supply zone to push price downward to provide a change of structure, telling us the market structure is shifting from bullish to bearish. And once we see a change of structure from bullish to bearish, it keeps telling us there's a possibility of more sales coming into the market. And due to this reaction, which was able to cause this change of structure, I should be able to identify another supply zone formed on a lower time frame due to this move. And basically, I'm expecting price to come back into that lower time frame, and here we'll take our entry. And in taking our entry, we should be expecting liquidity to be taken out. That is, we are expecting that price should be able to take out liquidity, and our take profit will be at the point where we are expecting price to take out liquidity. As simple as that. So basically, looking at this setup, it is exactly the setup which I used for this trade. Getting back into the trade, guys, you guys can clearly see from the chart that the price has been moving from up to down. Price has been bearish, that is, price has been moving downwards. Looking critically, price has been creating a sequence of lower lows, lower highs, lower lows, lower highs, and been moving downwards. So basically, since it has been moving downward, I was trying to sell the market downwards. Basically, first of all, what do I have to do? I have to identify all my most recent supply zones. There was a 1 hour supply zone, there was a 15-minute supply zone. And basically, I was expecting price, as price started moving upward, I was expecting a reaction to be formed around this area and for us to take a sell. Or if it does not happen, I was expecting price to also react from here. So I had two expectations. If price is able to react from here and we're able to see our setup formed due to this reaction, we will take a sell. But if it does not happen, we'll expect price to come up here and to react from here and to give us our setup, and then we take a sell. But if it does not happen on any of two of these reactions, then we forget about the trade. So unfortunately, what happened was price came into this 15-minute supply zone. If I shift you guys to say 15-minute supply zone, and we saw a reaction. So basically, we're on the 1 hour time frame. Let me scale down to the 30-minute time frame so you guys should see clear what's happening. So basically, we are on the 30-minute time frame as price was moving upwards. Let me zoom in the charts. As price was coming, obviously the market is bearish on the 1 hour time frame, and we're expecting that price should start being bearish also on the 15-minute time frame for us to take in a sell. Looking at this structure, we are able to identify first of all liquidity. This is liquidity sitting below this level, first of all. Secondly, we've identified liquidity where we're expecting price to come down and take. We're expecting price to come down here and take out this liquidity. And secondly, what are we supposed to focus on? Market structure. Remember, I have three concepts: market structure, liquidity, and supply zones. Since it's a sell trade, we focus on supply zones. Firstly, we identify liquidity. This is liquidity sitting below here. We're expecting price to come down and take out this liquidity. And secondly, we focus on market structure. We clearly see on the 15 market created a high here, which was broken to create another to form another high, which was broken to form another high, which was later broken to form another high, which was later broken to form another high. So this high was formed and created this lowest point, which broke structure to form this high. And later we saw that this is the lowest high here, which formed this highest point. So we mark this place as a change of structure. Remember, guys, Looking at the market structure critically on the 15 minute, you will see this is the lowest point which formed this high. After this is the lowest point which went up to break structure to form this high, and this which was the most recent lowest point which broke structure to form this high, and this was the lowest point which went up to form this high, and this was the most recent lowest structure which went to form this highest point, and was expecting another lowest point to form a high. But what happened? This lowest point was violated. It means as price started coming down, price did not respect the structure upward. But what still happened? Price broke structure to the downside, telling us 15 minutes now is now bearish, telling us on the 15 minute now we are focusing on selling opportunities. Basically, what I'm expecting is to sell, and in order for me to sell, I was able to identify a supply zone sitting on the 30-minute time frame. If you guys see, it has been marked here, so 30. Sorry guys, it has been marked here 30. If you guys see clearly, this is 30. It's the 30-minute supply zone. We were able to spot the 30-minute supply candle. Basically, we're expecting price now to retrace, like I told you guys in my diagrammatic setup, to retrace and to come and enter into our and give us our entry. Going back into our setup, we're expecting price to retrace and come back into that other supply zone which was formed after this supply zone, and we get our entry and we target liquidity. The same thing happens here. This bigger reaction came in here, broke structure to the downside, and we were expecting this consolidation and price to push back into our to the next supply zone which was formed, and we enter our trade and we targeted liquidity. That was basically it, and this was basically how we entered the trade. And this trade was a 4.96, guys. So that's all for the video. Thanks for watching. Try to learn from my concept, try to understand. Stay tuned to my channel. Please guys, try to subscribe to my channel, like my videos, comment if you want to learn something, and comment if you need a video on something. I will try to help you guys. Stay tuned, stay safe, and stay blessed.